So today, I'm gonna give you some tax tips on how you can potentially save hundreds and even thousands of dollars off your taxes this year, and we're gonna do it legally. But before we get straight into it, I'm just gonna remind you that I'm definitely not a tax accountant, and this is not professional financial advice. So take one of the immediate tips I'm about to mention and consult a professional tax accountant if you actually have any serious questions, all right? So enough of that, and let's get straight into it. So there's known to be two certainties in life: death and taxes. But before you get all espresso depresso on me, just remember there's actually something you can do about your taxes, and that's called tax minimization. Tax minimization is actually the practice in arranging your tax affairs to actually reduce the amount of tax that you're gonna pay. And this actually does work in all tax brackets, but in different ways. So today, I'm also gonna be talking about the low to middle income earners. And to begin with, as someone within that range, the very first thing you can do is actually claim all of your entitled deductions. It's really interesting to speak to different people and actually see how many people don't know what their claim entitlements are, and I'm just gonna pop up a very useful link by the ATO that will give you a very good understanding in terms of what exactly you can claim depending on what your job, what your industry is, and based on that, you can even claim a handbag depending on how you use it to carry your stuff to work. But at its essence, it really comes down to anything that you've purchased with the intention of being able to use it for your work or your job. Now, I'm not saying that you aren't doing enough, but the average person is often claiming a lot less than what they actually can. So if you're spending any money whatsoever that is related to your work or your job, then you are actually entitled to claim it. Even something small and insignificant can amount to a large saving at the end of the financial year. For example, you might purchase an item that's used for work, but even though you use it sometimes after work, it still counts as a taxable expense, and you can claim the percentage that you actually use it for your work. So for example, 40%. But as everything goes, if you are unsure, just hold on to the receipt of purchase and bring it up to a tax professional to ensure that you aren't actually missing out on any potential tax savings. Now, in saying that you can't actually do everything yourself, it really does bring me to the second point, which is actually to get yourself a tax accountant. When it comes to lodging your taxes, it's probably more important to consult a professional with inside knowledge and industry experience in taxes, and actually making sure that you get the most money back possible. By having someone with the sole purpose in actually making sure that you receive the largest tax refund, they can actually do everything in their power and actually go just beyond the line to ensure that you don't run into any deep water with the ATO. And the best part is that the amount of money that you pay for the tax accountant is actually going to be tax deductible itself. And the other reason that it's beneficial to bring in a tax professional is that not only are they going to help you save and actually bring more money back into your pocket, less money back to the government, but they're going to help you plan further on. So that can allow you to actually understand what you can do in the next couple of years, what you can do and how you can actually spread your money to actually make sure that you pay the least amount of tax each and every year. And one of the things that they might mention, and even though this might not be the most common and the most popular choice, it does bring me to the last and final third one, which is actually to make further super contributions. Now, I'd be doing a disservice if I didn't add this in, because by adding to your super contributions, you're actually being taxed at a 15% rate as opposed to your tax bracket rate, which could be as high as 49%. The reason that this is actually probably the less popular method stands to the fact that you can't touch your money until you hit the ripe retirement age of 65. But part of financial education is being able to get ahead and put your money into an area where you know that you're planning for your own financial future. And by putting your money into a retirement account and just letting it compound on growth over the next 10 to 30 years can only really lead to a positive outcome. Now, for most people watching this in the low to middle income brackets, the very first 2 points is already going to bring you hundreds and even thousands of dollars back into your pocket. But for those on a slightly higher income, should probably also look into getting private health insurance. If you're earning $90,000 as a single income, or even over $180,000 as a couple, not only will you get hit with the standard Medicare levy, but you're also going to get hit with a surcharge from 1 to 1.5% depending on how much you make. So that generally means if someone's earning $150,000 and over, they're going to receive a surcharge of 1.5%, which can be as high as $2,250. But by getting the appropriate private health cover, you can actually waive the surcharge itself, and depending on what you get or how much you're earning, this amount for the private health cover can actually be less than the surcharge that you will pay. But just a quick reminder that this doesn't actually include any types of extra policies, which is going to have no effect and you're still going to pay the surcharge. Now, I mentioned tax minimization earlier in the video, and the reason I say say this is because you want to be able to structure your wealth in a way that you aren't always just paying the tax man for no reason whatsoever. And by having access to a tax professional, you can then look into investing your income further, which opens up a range of new strategies in legally paying less tax, or tax minimization. Things like negative gearing on an investment property, capital gains tax offsets in terms of your investment holdings, and even a trust structure, which I'm going to avoid getting into any detail in this video. Once you begin looking into the whole of investing and making your money work for you, you're going to be entitled to options of tax minimization that's going to enable you to focus your money on building your own wealth instead of building someone else's. So it's always great to dive into the specifics of anything that you do, and saving tax is no different, but by nailing the basics, which is making sure that you're claiming every single deduction that you can, and also if you need it, getting professional help for any types of questions or ways to actually circumvent your area, your industry specifically, those things are going to make the biggest change, because if you're not doing things right to begin with, you're probably missing out on significant gains in the long term. So I hope you've enjoyed this video. I make videos weekly, so make sure to hit the like button on this video and definitely smack the subscribe button if you want to hear more from me. And hey, if any of these tips helped you out so far, make sure to comment down below and leave a comment in terms of how much money you may have saved or how it's helped you, and I'd definitely love to have a chat. So until then, I've left 2 videos if you want to keep seeing more of me, and I might see you in the next video.